Hey folks, car prices heading for a cliff? We all love a good deal, especially on a shiny new car. But have you noticed how the prices have been skyrocketing lately? It's like every time you turn around, the cost of a new car is higher than the last time you checked. But lately, car prices have been anything but a laughing matter. They've been higher than a kite at a 4th of July picnic. It's almost as if the car dealerships are trying to see just how high they can go before people stop buying. But hold on tight because the experts are saying things are about to change. The automotive industry is facing some serious shifts, and these changes could mean big things for car buyers. We could be looking at a 50% drop in car prices. Yes, you heard that right. A 50% drop. Imagine getting that dream car you've always wanted for half the price. That's right, you heard me right, 50%. It's almost too good to be true, but the signs are all pointing in that direction. Now, before you race out to trade in your old clunker, let's take a spin through what's going on in the crazy world of car prices. There are a few key factors driving this potential drop. First, there's the issue of overproduction. Car manufacturers have been churning out vehicles at a breakneck pace, and now there's a surplus. When supply exceeds demand, prices naturally start to fall. Secondly, the global supply chain disruptions have started to ease. With parts and materials becoming more readily available, production costs are dropping, and those savings are being passed on to consumers. And let's not forget the impact of the economic downturn. With fewer people able to afford new cars, dealerships are being forced to lower their prices to attract buyers. So, what does this mean for you, the car buyer? Well, it could be the perfect time to start shopping for that new vehicle. But be sure to do your research and keep an eye on the market trends. Use online tools and resources to compare prices, read reviews, and find the best deals. And don't be afraid to negotiate with the dealerships. With prices potentially dropping, you might have more bargaining power than you think. So, buckle up and get ready for a wild ride in the world of car prices. The road ahead might be bumpy, but with a little patience and savvy shopping, you could find yourself driving away in the car of your dreams without breaking the bank. Pandemic dreams, supply chain screams. Remember the early days of the pandemic, lockdowns, empty streets, and nobody going anywhere? Well, that put a real damper on car sales. Factories shut down and the supply chain went haywire. But then something funny happened. People started feeling cooped up and decided they needed a change of scenery. Demand for cars shot up like a rocket, but there weren't enough cars to go around. Remember the toilet paper shortage? Yeah, it was kind of like that. Easy money, pricey wheels, a recipe for trouble? Now add a dash of easy money into the mix. Interest rates were lower than a snake's belly, and banks were practically giving away loans. Suddenly, everyone and their uncle could afford a new car, even with those inflated prices, but like a sugar rush, that kind of spending spree can't last forever. Red lights flashing, the car market cools down. Fast forward to today, and the party's starting to wind down. Interest rates are climbing faster than a homesick astronaut, and those once affordable loans are starting to bite back. People are thinking twice about trading in their old cars, and demand is cooling down faster than a scoop of ice cream on a hot summer day. Dealers are starting to sweat as their lots fill up with unsold cars. Something's got to give, and that something is usually the price. Underwater blues, loan sharks circling. Now here's where things get a little dicey. Remember all those folks who took out loans when prices were sky high? Well, if car values plummet, they could find themselves underwater. That means they owe more on their car than it's actually worth. Talk about being stuck between a rock and a hard place. And you know who loves that kind of situation? Loan sharks. They're probably already circling like vultures, ready to swoop in and pick off the desperate and the vulnerable. Deja vu all over again? The phrase itself brings a sense of familiarity, a feeling that we've been here before. But what exactly are we talking about? Echoes of car crashes past, the unsettling feeling that history might be repeating itself, especially in the world of automobiles. This whole situation might feel a little too familiar. It's like we're watching a rerun of a show we didn't particularly enjoy the first time around. We've seen this movie before, and it doesn't usually have a happy ending. Economic downturns, market crashes, and financial instability have a way of leaving a lasting impact. Remember the housing crisis back in '08? It was a time of great uncertainty and financial turmoil. Yeah, a lot of folks lost their shirts on that one. Families were uprooted, homes were lost, and the ripple effects were felt across the globe. And let's not forget the dot-com bubble bursting back in the early 2000s. The tech industry was booming, and then, almost overnight, it wasn't. Lots of folks learned the hard way that what goes up must come down. The stock market took a nosedive, and many were left picking up the pieces. The car market isn't immune to the laws of gravity. Just like housing and tech, the automotive industry has its ups and downs. What goes up, especially artificially inflated prices, must come down. The recent surge in car prices has many wondering if we're on the brink of another crash. The production lines are buzzing and demand has been high, but how sustainable is this growth? Dealerships are starting to see a slowdown and unsold cars are beginning to pile up. It's a sign that the market might be cooling off. Experts are divided. Some believe this is just a temporary dip, while others warn of a more significant correction on the horizon. For consumers, it's a confusing time. Should they buy now or wait for prices to drop? The uncertainty is palpable. Economic indicators are mixed, and the future of the car market remains uncertain. One thing is clear, though, history has a way of repeating itself, but with every downturn there's always hope for recovery. The key is to learn from the past and navigate the future with caution. So, as we move forward, let's keep an eye on the signs and make informed decisions. After all, those who don't learn from history are doomed to repeat it. Deja vu all over again? Maybe. But this time, let's be prepared. Musk's crystal ball. What's next for the auto world? Even bigwigs like Elon Musk are sounding the alarm. He's been warning about a serious recession and predicting tough times ahead for the auto industry. Now, I'm not saying you should base your entire financial strategy on what one billionaire says, but when someone with Musk's track record starts waving red flags, it's probably a good idea to at least pay attention. The road ahead, bumpy ride, or smooth sailing? So, what does all this mean for the average Joe and Jane who just need a reliable set of wheels? Well, it's tough to say for sure. The economy is a fickle beast, and predicting the future is about as easy as parallel parking a school bus in a phone booth. But one thing's for sure, we're in for a bumpy ride. Should you buy, sell, or hold? If you're in the market for a new car, you might want to sit tight for a while and see how things shake out. The automotive market is currently in a state of flux, with prices fluctuating more than ever. Economic factors, supply chain issues, and changing consumer demands are all playing a role in this uncertainty. Prices could drop significantly in the coming months, and you don't want to be the sucker who paid top dollar just before the bottom fell out. Historically, car prices tend to drop when the market is saturated with inventory or when new models are about to be released. Keep an eye on industry reports and market trends to make an informed decision. On the other hand, if you're desperate for a new ride, you might be able to snag a screaming deal as dealers get desperate to unload their inventory. Dealerships often offer significant discounts and incentives to clear out old stock, especially towards the end of the year or fiscal quarter. Timing your purchase can make a huge difference in the price you pay. Just be prepared to haggle like your life depends on it. Negotiation is key in getting the best deal possible. Do your research, know the market value of the car you're interested in, and don't be afraid to walk away if the deal isn't right. Remember, the power is in your hands as a buyer. Happy car hunting. A wrench in the economy, the ripple effect. This whole car price roller coaster isn't just bad news for car buyers and sellers. It could have a ripple effect throughout the entire economy. When people stop buying cars, it hurts manufacturers, dealerships, and all the businesses that supply them. That means job losses, lower profits, and a general slowdown in economic activity, and nobody wants that. Fasten your seatbelts, a wild ride ahead. So there you have it, folks. The car market is heading for a potential crash, and it's going to be a wild ride. The good news is that if you're patient and play your cards right, you might just snag the deal of a lifetime. Thanks for watching.